It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, your favorite man, smartest man in the room, Mr. Michael Becker.
Hey, Paul.
Michael, how are you today?
Doing well.
So before we get into it, Ask Mike Monday's question, I thought we would just kind of run down some of the things that are going on. One of the things I really want to pound the table on, make sure that you do get your ticket for September 13th. September 13th is the Old Capital Multifamily Conference. It's at AT&T Stadium. It's the one that everybody talks about, that we bring in all the major players in multifamily, and it's an all-day event. Roger Staubach is going to be our keynote speaker. Mike, why should somebody go to that event?
There's certainly going to be what I feel above average or exceptional content that we're going to provide. It's going to be specifically focused on Class B and Class C multifamily. And to my knowledge, it's the only national conference that's going to be focused exclusively on Class B and Class C multifamily. So really kind of the workforce housing. But more than that, it's really just a networking that you're going to be able to get and meet people that are actually out there doing this. We're expecting over 700 people at our event. We're going to have all the players from across the state of Texas and hopefully from elsewhere. A lot of the major brokerage shops are their top producers. So if you want to go and meet people and really network and get introduced to the people that can help you actually buy apartment complexes, this is a place to go. I think that's just the easiest way to shortcut it. As I always say, you can't expect people to come to you and give you money or give you a deal. So this is a great way to go out and start meeting people and networking and really try to grow your base as you expand into this industry.
So find a way, get on a Southwest jet and come on down to see us. It's a full day event, and you will have a good time. So get in the game. Get in the game of the Old Capital Multifamily Conference on September 13th. We look forward to seeing you. Also, too, don't forget about the 17 white paper report that Michael and I wrote about really the structuring, the dynamics of how to get your first apartment loan. This is something you want to listen to or read and be part of. Where do you find that, Michael?
Yeah, both the tickets to the Old Capital Conference as well as the white paper. You just go to oldcapitalpodcast.com. That's www.oldcapitalpodcast.com. And there you can, not only register for the event, but sign up for the white paper that is kind of really the nuts and bolts of blocking and tackling and how these deals get put together.
And so here's the question. Michael, I'm looking at a property that has a LURA. What the heck is a LURA, and what do I need to be aware of?
Yeah, so LURA is an acronym for Land Use Restriction Agreement, so LURA, LURA. What that is really, it's deed restrictions that are put on the property that kind of run with the land. So if a lot of these properties you'll see out there for sale will have a LURA on them, and it kind of is conveyed from ownership to ownership group, is not terminated upon sale. So basically what it is, in most cases, it's where there's a deed restriction or a covenant that says that all or a certain percentage of the units that are on the property have to be leased at an affordable rate. So basically meaning that these units have to, either a certain percentage, all of them have to be leased at either low income or very low income. So typically either 40, 60, or 80% of the area in AMI, area median income. So basically, if say half your units have a LURA on them, the other half are market rate, half of them have to be leased to tenants that don't make more than 80% of the area AMI, area median income. There's all these tables and charts that are put out there in your local area. It's basically by county, and tells you what kind of the average area income is. So if your area might be $3,000 a month, might be the average. So you have to be 80% of that, and you have to have half your units leased to those people. So really what it does allows some affordability, and it's a way for the government to make sure there's more affordable units in those areas. Why there's so many of them on the 70s and 80s product that are all kind of starting to come towards an end now. But in the Southwest in general, and Texas certainly was the epicenter of a lot of this stuff. Back in the 80s, coming out of the savings and loan crisis that the Southwest part of the country had, there's a bunch of bank failures, and the government created a company called the RTC, or Resolution Trust Corporation, that dealt with all these foreclosures that were coming out of the S&L crisis. And when the RTC was selling a lot of these buildings, in many cases, they put LURAs on it where they put either some or all the units had to have these income restrictions, kind of as a way the RTC knew they were selling these properties and the future owners were going to make a bunch of money. So it's kind of a way that they could help the affordability of those certain areas where they sold those apartment buildings. That's why there's a lot of them. From the good standpoint, is the Fannie Mae and Freddie Mac both have a mandate to offer and a bunch of financing to support the affordable communities across the country. And so if you happen to have a LURA, you tend to get some financing breaks through Fannie Mae and Freddie Mac specifically, where you tend to either get a little bit higher leverage on some of the loans, maybe a lower debt coverage ratio, and some pricing breaks as well. So if you're able to find it and make it work, there's certainly some advantageous aspects within the financing that you can get. Really, the biggest drawback is just another layer of administrative costs that you have to make sure that you're in compliance with the LURA agreement that you provide, reporting to the local government agencies, and occasionally they'll come in and audit you to make sure that you are in compliance with what the restrictions of the LURA say.
So that's an important thing, though, too. These LURAs, again, land use restriction agreement, they flow with the title to the property. So if one seller has it, you being the new buyer, you're going to get it. So it's almost near impossible to get that off there. And they're usually in effect anywhere from a 15-year term with an additional another 15-year term. So if they were started back in 1990, they'll be come and due next 3 or 4 years, and then they'll get removed. Another thing that you have to be observant on is that just talking a little bit about the affordability of rents. So if you go in there and you don't realize you have a LURA on the property, and your belief is that you can increase the rents by $150, $200 on a value-added property, and you try to do it, the LURA kind of says, well, you may be at the top of the market right now, and you cannot increase the rents if you have a LURA against the property. And so the state goes in there and audits you probably once a year, and you have to fill out different paperwork to make sure your tenants are actually below the income. So they're going to check the tenants' paycheck stubs and tax returns and W-2s just to make sure that everybody in as part of that lease is below income. The total aggregate is below income. So there are some recording restrictions that go with that property. So a lot of forms to fill out.
Yeah, just to make sure I drive Paul's point home, I don't know if I did the best job when I was explaining it. There is by county, there'll be the maximum rent that you can charge for this stuff to stay in compliance with the AMI rules for the 1-bedroom, 2-bedroom, 3-bedroom units, et cetera. And it's by county, and they change those every year. So you just need to make sure that when you're going in, and if you're trying to think that you can raise rents up to $1,000 for this 2-bedroom unit, but the maximum per that, the restriction is only $900, it could mess up your pro forma. So make sure when you're looking at a LURA, there's the extra layer of complexity, and make sure you understand what you're allowed to charge, because you might be improperly underwriting it with other properties that are strictly market rate that don't have the LURAs in place on them.
Yeah, one of the things that now I'm going to get into a little bit of the weeds, though, too. So for properties that have LURAs, we can underwrite the deal instead of 125 down to 120. And that the interest-only piece is not delegated by the lender. It has to go to Fannie Mae for the review. And then if there's 3 years or less remaining, we have to underwrite the transaction at the market rate standards. So if it's less than 3 years, we can go to use the market rate rents on the deal. And the lender has to review, Fannie Mae has to review the entire regulatory agreement, that original LURA agreement, and that we have to understand the differences between market restricted rents and market rents. And so it's a little bit more, it's not everybody that Fannie wants to get into to have a property that has a LURA. So if you have some background with affordable housing, you're more likely to get a big check mark saying that you're okay to purchase a property that has a LURA against it. So remember, the LURA is on the title of the property. So if one of the things, hopefully that's in the offering memorandum, that it says that it has a LURA up front. But if it's not, take a look at the title work, or have your attorney take a look at the title work and see if it's still in effect and flowing through the title to the property. I think that's about it, Michael. Anything else?
That's it. No, I definitely appreciate everyone listening. If you guys want to find out more information about us, you certainly go to oldcapitalpodcast.com. That's the best way to find out information about all our upcoming events, and certainly get on our weekly email list where we kind of send out tombstones of the deals, market updates. And if you want to find more information about what my company does, would just go to our company's website, which is www.spiadvisory.com. That's SPI like spy, advisory.com. There's a contact us page if you want to find out more information about what we do. Just kind of fill the form out, and we're happy to set up a 10 or 15-minute telephone call with those who want to potentially learn about investing with my company, SPI Advisory.
That was the mayor of Beckerville, Mr. Michael Becker. I'm Paul Peebles. Have a great day.